Hello. Today what we're going to do is to solve past question personal taxation for Oxford Brookes University for 2011-2012. Let's quickly go through the question. First of all, just to let you know, the actual question was in 2011-2012, but because you want to use the current tax year, we use 2012-2013. Right. Question 1 says Paula is employed by Delta Limited. Details of Paula remuneration package of 2012-2013 are as follows: a salary of 86,500. Tax paid under the pay as you earn scheme PAYE was 24,610. Right, I have a small. Let's keep the notes down. Right, salary was 86,500. And amount of tax she's already paid within a year, because she pays her source every month she pays, so that's the tax she's already paid. Right, it says a diesel car, a use of a diesel company car with a list price of 26,900 and CO2 emissions of 142. Right, they bought a car for Paula that cost 26,900. And CO2 emission was 140 for that car. So with this, we're going to calculate for the benefit in kind for them buying that car of 26,900 for her. Right, say Paula pays for all her own fuel. Paula originally contributed 6,000 to the capital cost of the car. Right, she paid for her own fuel, so that'll be 0. And put it there. That'll be 0 because that's what the law says. If you're employee, you contribute for your own fuel, that'll be 0. You're not getting no contribution. Benefits in kind, sorry. She made a contribution of 6,000. So she made a contribution of 6,000 towards the cost of the car. Right, what the law says is if the maximum amount of contribution you can make towards a car is 5,000, right? So to calculate the benefits in kind, we put the actual cost of the car, which is 26,900 minus not 6,000, the actual contribution made. The maximum is 5,000, so we put 5,000, so we get 21,900. And what the law says is to calculate the CO2 emission, right? We have to run it down to 40 so that it can be divisible by 5, right? So the formula, let's do it. So you put bracket 140 G minus 100, we subtract 100 from it, right? And we divide the whole thing by 5, right? The percentage that we get from here, we add 5% to it, right? Sorry, we add 11%, not 5%, right? But here, because it's a diesel car, right? It's a diesel company car. Anytime it's a diesel car, we add extra 3% to it. Then we get a percentage, and that percentage could be maybe a percentage. When it calculates all these, it could be a percentage, right? So let's say a percentage times this amount, the actual cost of the car, not actual cost, the benefit in kind cost of the car. So we times it with that 21,900. Then we get our benefits in kind. Right, let's jump on to the next question, the next stage. It says Delta paid health insurance premium for Paula at a special discounted group rate of 27,000 per person. If Paula has taken out the insurance herself, the cost of the premium would have been 30,500. Right, so we put 27,000 there. Sorry, 2,700. Right, because this we ignore it because it's a conditional sentence. She didn't actually do it, so that 30,500 will be left out. Right, we go to the next stage, which is it says an interest-free loan of 7,500 was made to Paula throughout the year. Right, she got an interest-free loan, and what the law says is that if she had gone to somewhere else, that 7,500 that she got from her employer or a company without paying interest, yeah, that we take the actual interest that could have been paid in the year, which he says assume the official rate of interest is 5%. So the law is saying we assume the official rate is 5%. So that 5%, yeah, that interest that she didn't pay, 5% interest that she didn't pay, out of that 5% she has to pay tax. Do you understand? So that's what the law is saying. Right, let's go back to the question. Right. So we're done with interest. So during the year, the Delta lent a new tablet computer to Paula for her personal use throughout the year, which cost 1,800. Right. So 1,800 computer. What the law says, if you rent any equipment to the person or an employee, 20% of that amount, yeah, you pay tax on that 20%. Do you understand? So Paula's gonna pay 20%. Out of that 20%, she's gonna pay tax. Right, we go to the next one. Say Delta Limited and Paula contributed 5% of the Paula's pension or Paula's salary to an occupational pension scheme, which is a salary related scheme. Right, out of her income, salary income, or out of the income that she received, which is 86,500, 5% she actually contribute to pension. Do you understand? So we minus 5% from that, 5% of that from that amount. And here it says Paula also contributed 8,000 to net to her personal pension scheme in October 2012. Right. So here we're going to gross it up. 8,000 gross up. I'm going to explain this one in my other slides. What is gross up? So we times it by 100 and divide it by 80. Right? So dividend, let's go to dividend. During 2012-2013, Paula received a dividend from Echo Limited of 11,900 and an interest on her bank deposit account of 2,500. All of these you gross them up, as I said, but dividends, grossing up is slightly different. It's not 20% gross up, it's 10%. So what we do is like 11,970 times 100 divided by 90. That's the gross up. And when you go to deposit account, the interest is 20%, so it's 2,500. Yeah, times 100 divided by 80. And it says, in addition, in May 2012, Paula received an interest of 250 on her cash ISA account. That cash ISA, we don't charge no interest or no tax on it, so we put no tax on cash ISA. Cash ISA, you have to know that. And she made a donation of £500. Put that one down. So Paula received made a donation via gift aid of £500 to the disaster emergency committee in 2012. So this is the end of the question. We put everything down. So we're going to use that information we collected to calculate Paula's income liability for 2012 and 2013. Right, we've done the assumed official rate of interest is 5%. Right, so we're going to use this to go to the next stage and calculate for everything. Right, so right now, even though let me stress on this, even though she actually paid tax already, we have to know other incomes that was allocated to Paula, then she has to pay income on tax on them, all of them. So not only her salary that she has to pay tax on it, she has to pay tax on benefit in kind received from the car she was being bought. She has to pay tax on interest-free loan, dividends, and other stuff. So now we're going to the next stage. Thank you.